Widespread rain in Western Australia is helping some grain growers, but also causing plenty of problems. Protein levels for the wheat are down and the harvest is slowing. WA has little, if any, carryover wheat, so if deliveries slow because of the rain, WA growers might expect some short but sharp price spikes so shipping schedules can be met. And Pro Farmer reports the rain will benefit 70% of growers. The latest newsletter also puts the WA wheat crop this season at around 10 million tonnes, more than double last year's drought-hit crop, and not that far behind the all-time record. Prices now, as production figures lift, returns are gradually easing. Here's the latest from ASX. New South Wales wheat for March of next year sits at $225. There's a slight margin for WA wheat. Spot prices continue to backpedal, especially wheat. That Newcastle price has dumped $30 in a little over a month. Canola softened again, while demand for sorghum is reasonably steady. And it's worth noting the gap between GM and non-GM canola now sits at $25 a tonne at Geelong and up to $40 a tonne at Kwinana in Western Australia. Checking overseas now, and as is the trend these days, it's the macroeconomic issues having an impact in the world of agribusiness, especially the Greek yo-yo. One day yes, next day no, or is that maybe? Chicago finished on a positive note, but prices are mostly down on last week. Some eyebrow-raising came after figures revealed American wheat exports are down 30% on this time last year. Soybean exports are also way off last year's pace, and in contrast, corn sales are up 75% on 2010. In New York, cotton dumped 6 cents on the week despite some reasonable exports, and sugar slipped for the first time in several weeks, closing below 26 cents. Moving now to livestock, we find national slaughter numbers falling in every state except Queensland and South Australia, and this is alongside a trend to retain breeding females. Herd building is apparently the name of the game. Last week was mixed, with export categories firm. Although cow demand eased a fraction, sales to Japan and Korea lifted strongly in October compared with 2010, but it's worth recalling the severe disruption to exports in October last year because of widespread rain in Queensland. And this left the Eastern States Young Cattle Indicator at an even $4 a kilo. Now, a couple of interesting notes from the live trade. A property called Morangi went under the hammer in Brisbane last Friday. Morangi is a 400,000 hectare block adjacent to Newcastle waters in the Territory and has been described as perfect for the live trade. The offering was also the first real estate test for the live trade since the Indonesia suspension. Well, bidding reached $5 million before the property was passed in, but Ray White-Rule told me there's massive interest and they're confident of a sale. And there must be confidence around. Prices out of Darwin last week were at an all-time high. Steers hit $2.20 and heifers $2.05. There's a massive rush to load boats in virtually every port across the north. Lamb and sheep supply remains tight. Mutton quality is an issue, but both prices are well above this week last year. And good news for pig producers. Last week the market gave up its best lift in several weeks. Porkers are up 4 cents, just ahead of the rise for bacon. Supplies here are tightening heading into Christmas orders. Finally, to wool, where news from China is disturbing. A distinct slowdown in key export markets from China could impact on demand for raw wool out of Australia. The crucial time is the next 2 months and retail demand in Europe and the United States. Any further downturn will be felt in the Australian auction rooms. But last week was okay. Demand continued on the back of the firm closing the week before, and at the close, the Eastern Market Indicator had lifted 0.7% to 1,224 cents. Once again, buyers from China were dominant, with support from India, Europe and Taiwan. And that's the Landline check on prices.